Hey guys, welcome back. My name's Aaron. This is Czar Finance, episode 40, Technical Analysis Chart Patterns. Okay, so this is going to be kind of quick. I'm sorry I didn't have time to really put a lot of effort into this right now. I'm just trying to lay out my foundations for the entire year. But the long story short is this is going to talk about basic chart patterns and recognizing them when it comes to stock market trading, and some two great resources that I use on an everyday basis to sort of learn more about chart patterns and understand how and why they're used. So when it comes to chart patterns, long story short, in technical analysis, the distinctive formation created by the movement of security prices on the chart, it is identified by a line connecting common price points, closing prices, highs and lows over a period of time. Characteristics try to identify patterns to try to anticipate the future price detection, also known as trading patterns. Okay, so you're looking for trading patterns when it comes to looking at stock charts. Now, when you look at different stock charts, you're looking whether it's bullish or bearish in the market. Bullish means going up in the market, and bearish meaning going down. So when the markets are doing well, you're going to look for patterns that you can capitalize on that or gain money off the charts that are going up so you can profit with them. And a bearish market is the exact opposite of that. You're going to turn around and profit on the losses that are going down so you can profit on the way going down and sort of capitalize on that, doing short sales and things of that nature. Alright, so in the bullish chart pattern categorization, there's a couple that I typically look at, and one of them is called an ascending triangle. What you're seeing here is a pinching pattern, okay? You're going to see where a line of resistance and a line of support start to get together, and as they start to form a pinching pattern where the ball bounces from the bottom of support, hits resistance, bounces up, top, back and forth, back and forth. And here's a live example you can see right here of a stock chart bouncing up and down and pinching. And then usually what happens is it's going to start gathering tension and getting really tight. And then what's going to happen is it'll break up or it could break down. But normally, not normally, but typically it breaks upwards. And usually it can go up, and then you wait for the second candle to confirm the first one, because this could be a fake out. It could go up and then go back down, called a death hook. But what happens here, it's consolidating, okay? You guys can see this. I have a support line here and another support line here, and actually this is a resistance line. And it breaks out, and then you can capitalize. You can either buy right here, or if you feel the necessary need and you feel chancy and you're really good at this later on, you can actually buy here and start to capitalize on this breakout and really get the money, and then pull out right here and make some good money on your income there. The next one here is a bull flag, and this is another one that I typically use or like to see, is where the stock price goes up, 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 and then it capitalizes right here, and then kind of comes down, ping, 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 because when it goes up too high too fast, it has to retrace and come back about halfway through the stock price, if you will. Then it's going to rebound off of that. So here's an example. It's going up, 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 up. It's coming back down, back in the channel here, and then it's going to break out if it breaks above the resistance line right here, okay? This is the resistance line. If it breaks out above that, then you can capitalize on the next candlestick and ride that next wave going up. So this is called a bull flag. Alright, I apologize for the sound on my computer. It's the fan that's blowing up with the noise. The next one I use is a high base. Very typical to see a lot of high bases. A lot of times what's happening is the stock price will rise like this, and you'll also notice that it's going to start rising and kind of chopping around in the middle area here at a level of resistance. It's trying to push through it. 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 As it does, enough support and energy would pop that through the ice here, and it'll break out. So that's when you start to see something like this at a high level. You'll see it break out, and you can capitalize right about here, and it'll break out, and then you can capitalize on that. That's another way. The same goes true when it comes to a bear market, bear chart patterns, okay? It's the same thing, it's just flipped opposite, upside down. If you get into short selling and you want to get involved in that, the same thing can be true. You have a descending triangle, again, the ball bounces from resistance to support, back and forth, condensing like a spring. It's getting tighter and tighter and tighter and tighter and tighter. And before you know it, instead of breaking up this time, it's going to turn around and break down. And then once it breaks down, then it's going to start kind of doing, breaking down. It's going to just head south on you, basically. And you can capitalize on it if you are doing short sales, which I will talk about again later on. All right. Bear flag, same type of deal. As the stock price falls and falls and falls and falls and falls, falls, it can start to hit a bounce area and go up, 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 then bounce down, up, 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 back down. And then what will happen is it'll break either up through the line of support or resistance or come crashing down through this support line. And usually when it comes crashing through down the support line, it kind of falls hard. Typically it just drops here, and then I'm surprised it even went this way. And then it'll fall really hard to kind of low base and fall down, usually in heavy volume, as you can see here. The same thing goes true for the low base. As stock prices come down, it'll hit a strong support level that's been established for a long time in the past. And you can see that the ball bounces off this the stock price will bounce off this relatively quickly. And if it's hugging the line at the bottom of the baseline, it will typically be a strong level of support, but if it does break through that level of support, then it's going to crash down to the next level of support, which is usually a point or two below that, depending on if there's any bounce or recall on that. So keep an eye on these charts here. If you look at the ones that we looked at prior to, you have the ascending triangle and ascending triangle. You have the bear and bull flags, and also the lower base. Some extra resources for you guys to really check this stuff out, and the guy I follow who's fantastic about this on a daily basis is Des Woodruff. He works for Grok Trade, and he's the mentor and educator for that website. His website he also owns and works with is freeonlinetradingeducation.com. It's fantastic. Take a look at his website. You can see his bullish patterns, his bearish patterns. You can learn about it. He does videos on a daily basis on how to read and understand stock charts with him and Mark the Meerkat Suffren, who's also fantastic, and he does day trades. Great resource. I can't tell you, every single day these guys bust their hump and they do the videos for everybody online for free. Take advantage of it, okay? These guys might not do it for long, but I'm telling you, take advantage of it. These guys are mentors. They're fantastic. My heart goes out to those guys. They are the best thing on learning this stuff on a daily basis, and it's a great way to learn first before you go to the 201s and the 301s and get full mentoring from them. And another great resource. The other thing that I like to go to is to check out stockcharts.com. Great site where they have lots of references on how to read stock charts, how to look at chart patterns, the different types that are here. I mean, I only mentioned a couple, but there's a lot of different patterns here. But my advice to you is to really get familiar with a couple of them, start recognizing them, and start building your own charts and putting your support and resistance lines to identify them. Once you start identifying them and you can start predicting where the stocks will go without playing any money in the stock market, you will be good at this. You really will. I mean, you can start off with $100 and make it to $200 and see if you can do that for a month. And then after a little while playing with it, maybe you say the next month you do, take that $200 and make it $500. And then you start doing that for 3 months and playing with $500 only, not going any further than that. And then you bring it up to $1,000, and then you kind of keep going with there. And then before you know, you'll be doing 10,000 or 20,000 or more incremental buys on once and making some good profit from this. So again, my name's Aaron. This is Czar Finance, episode 40. I hope you guys really enjoyed this. I know it's a little bit dry on some of these videos here. I apologize. I'm just trying to lay out the structure so that next year in 2017, it's going to be very exciting, and I got a lot in store for you. I'm going to put my editing skills to the test here. I've been holding off because I'm trying to make them quick and easy and get them out of the way and just kind of lay out the foundation. So next year, they're going to be great videos. All right, I will talk to you later. Thanks for joining me. Bye-bye.